What is up, y'all? Welcome to the GC Futures channel. My name is Colin. Me and my boy Gabriel are going to be posting trading tips and lessons on this channel. Today's video is going to be a first video in a short playlist. It's just going to be a little mini boot camp so you can understand the basics of trading. That being said, let's get into the topics for today. We're going to be talking about what is a candlestick and types of candlesticks, what's a tick, what's a trend, break of structure, and change of state of delivery. Went on to a candlestick. This video is just going to be very basic. This is for people who've basically never seen a chart before. But yeah, let's get into it. So there's two types of candles. There's going to be a bullish and a bearish candle. This is going to be a bullish candle. Bullish just means up. Bearish just means down. It's that simple. So a bullish candle is going to look like this. Basically means it opened down here and closed here. Okay. So when you open here, the wicks mean where price went to but didn't close. So this price right here opened up here, came all the way down, came all the way up here, and then closed right here. All right. Bearish candles are going to be the opposite, just going down. I'm gonna just leave them like in a red and green format to make it easier to understand. So let me change this right here. Fix. All right, this is the same thing in price. Opened up here, went here, didn't close, came all the way down here, didn't close here, closed here. All right. What I mean by closed is you see these time frames. There's like hourly time frame right here. Basically mean one of these candles represents one whole hour. So right here, we opened up at this price right here, came all the way down here, and after an hour, we closed right here. There's gonna be multiple different time frames. There's a 5 minute, 1 minute. So basically, each of these candles are 1 minute long. So it's gonna open up here. Whatever it does within a minute, that's where it's gonna close. All right. All right. So that's basically all the candlestick is. Also, it's pretty important to know how they move. Um, so basically, when you have a bullish candle, it's most likely gonna open up right here. Okay, it's usually gonna come manipulate down. That's where that wick is formed. It manipulates down. It's gonna come all the way up to the high right there. Then it's probably gonna come down and close right here. So bullish candle, another way to call it, it's gonna be an open, low, high close. All right. Bearish candle is literally just gonna be the opposite. So it's gonna open up right here. It's gonna manipulate up, putting in that wick. It's gonna come down to put in the bottom wick. Then it's just gonna come and close right here. This is also known as open, high, low, and then close. That's where the wicks come in. All right, very easy. Um, there's different types of candlesticks. There's like a bunch that you're gonna see online. Pretty OD. Like for example, like if you search up like candlestick patterns, like bro, fucking candlesticks. There's like a whole bunch, bro. A hat hold, the matching. I honestly don't know what any of this. This is really the only type. These are the only couple types I use. All right. Yes. All right. First candle is just gonna be a doji. All right. So doji is basically where market doesn't really know where to go. It's kind of indecisive. So you're just gonna have a small, like a very small body with some pretty big wicks. There. There, that's a doji, all right? Kind of like market doesn't really know where to go. It's like also known as like indecision in the market. That's one of them. The other one that I use, dojis are not really gonna like they're just good to know so you like have some type of market analysis. Like for example, right here, like this candle right here, that'd be considered a doji. The wicks aren't like too big, but still, it's a doji just when you have like a body like that, like so small. The other type of candle that I use a little more often is gonna be a hammer, and it could either be called a hammer, and it's either gonna be bullish or bearish. If we have a bearish hammer, basically means this body can be a little bigger. Basically means that price went all the way up here, right? So it went all the way up here, but it ended up, so opened here, went all the way up here, and it ended up closing down here, meaning that there's a lot of bearish pressure on this trade, right? Like the wick is like that big, the hammer candle. And then for bullish, it's gonna be the other way, which is basically green to make it easier. Wick gonna be all the way down here, and let's say the wick ended there. That'd be kind of a bullish hammer, all right? So price opened up, came all the way down here. This looks like a bearish candle, and then came all the way up here, reversed, closed here. That's a good indication that it's going to be going up. Now, you don't enter these solely just off the candles. It just kind of uses it to help your entry. You don't understand the wicks, just like real quick, like let's take this candle, for example. So this wick was all the way down here, which means in theory, this candle looked like this. Make it red. While this candle was open, it looked like this. It looked like a big bearish candle. So that's why I like bullish hammers or bearish hammers, because it looks like it's about a dump, but then we come and we close all the way up. I guess technically it would look more like that, but all the way, it was all the way down here, and then it reversed all the way up and closed up there. That shows good bullish momentum. All right. And then the last kind of candlestick, it's not really like a type of candlestick, I guess. It's just kind of more like, I don't know, like market analysis. So like a strong close. I call it a strong close. Is basically just like this is a bearish candle, has a wick, and like there's not too big of a bottom wick. So you just like it came all the way down here. It's a strong close. If it doesn't have a wick at all, that's like an even stronger close. But like when it barely has a wick at the bottom, that's a pretty strong close. Pretty good indication that we're gonna keep going in that direction. That's displacing to one side. Very good. Same thing with the bullish candle. So same thing with the bullish candle. Little wick here. Okay. Little wick here. Displaced a lot. Doesn't really have a wick. So we didn't really, once we got to the high point of the candle, it didn't really like close down below too much. For example, like this price action is pretty wicky because we're on the 1 hour. Look at that on 5 minutes. Maybe show you like some different examples. So for example, this right here, this candle right here is actually a very good like indication. That's a strong bearish candle. Why? Because we came, opened up, put in the wick, came down. I don't even think there's a wick on that. So we literally closed right there with a lot of bearish pressure. All right, that's a good example of one. This could be considered a bullish hammer, although we didn't end bullish because this candle is still bearish. We still were all the way down here and came all the way back up here. So I'd consider that a bullish hammer. Um, this one isn't really a bullish hammer because I don't know. It's first of all it's bearish and it's still like a pretty decent body size. But this is like a perfect example of like a bullish hammer right here. So price opened up here. It was all the way down here. It came up reverse, and you can see we reacted a bit up. That's not because of the hammer. It just shows. That's like more like confirmation that we're gonna go up. That makes sense. So I mean that's pretty much it for candlesticks. Very easy stuff. Figure this out. So next, what we're gonna be talking about is a tick. Next is really just what's a tick. Basically, here you're gonna pull up your long position box. Here, technically these are called pips and these are the ticks, but I just refer these to ticks just for it to be easier, just to not overcomplicate. We're on NQ. Um, so one NQ tick, here, write this down so you can take note. One NQ tick is $20. One MNQ tick, which is the micro NAS, going to be $2. So how would you calculate this? This is just gonna show you like how fat your stop loss is gonna be, like how much risk you're actually putting on the table. Make it easy, we'll do a stop loss of 25. So you see 25 here. If you're trading on NQ, you would do 25 times 20, which is what is that, $500. So one contract of NQ with a 25 stop loss would be you'd be risking $500. And on MNQ, you would be risking, you do 25 times 2, which is 50. You'd be risking $50 on a trade. That's each contract. All right. That's really not that complicated either. It's just, so basically a tick is just a unit of measurement, like for your trade, how much you're risking, how much you're going to profit. You just need to know that when you're trading futures because, like, for example, on Top Step, before you enter, you're not going to have a calculator. You kind of have to calculate this right before you enter your trade and how much contracts you're going to be entering. So yeah. Next up, we're going to do trend. Trend is very easy. Trend is basically exactly what it sounds like. Are we in a bullish trend or are we in a bearish trend? So if I put this like on a line tool, here, let me draw this up. If I were to draw out a trend, a bullish trend would basically be over here. Obviously, it's not gonna look like this with candles, but this is just like you can visualize it very easily. Basically, you're in an uptrend. What you're gonna want to see is made a high here, okay? Come down, higher low, come up, higher high, higher low, higher high, and it keeps going, right? So every single time you make a new high or a new low, it's gonna be higher than the previous one. That's how you know you're in an uptrend. Downtrend, the same thing. Boom, low, here, lower high, low, or high, and then you keep going. That's a downtrend. All right. Basically, all a high or a low is. I should have explained this in the candlestick part, but I'll explain it now. It's really not a big deal. Basically, a high is obviously goes up, it goes down, boom, right up here. That's the high. How that's gonna look like on the candlesticks is right here. You have a bullish candle, bearish candle. So to write it out, a high is a bullish candle followed by a bearish candle. All right, that's a high. That's really easy. Then low is the same thing, but opposite. A low is a bearish candle followed by a bullish candle. All right, so basically a low right here, boom, bearish candle, bullish candle. So right here, you're gonna measure the wick of either the bullish or bearish candle, whichever one has the lower wick, that's the low. So this is a low, right? So this would be a low right here. The point out, it's just you get it. Low. Okay, come up here. Bullish candle followed by bearish candle. All right, whichever one's higher. Boom. That's the high. I'm down here. Even this, it doesn't look like it, but this is still technically a low and a high. They're just not really important, so you're not gonna matter about them. But still, boom. Bullish candle followed by bearish candle. High right here. Okay, come down here. Bearish candle followed by bullish candle. Boom. Low right here. All right. So now that I'm marking these out, it kind of when you notice quickly that this is a little small downtrend. Why? High right here, followed by a low right here because right bullish candle followed by a bearish candle, and then so high, low, lower high, lower low. That's it. We'll find an easier one for you because that's like very choppy price action. Right here, this is very easy to tell. This is a uptrend. All right, boom. We have here low, right, and technically a high right here, technically a higher high, higher low. But just to make it like just to make it seem easier, we're just gonna point out like very obvious highs and lows. Boom, high right here, perfect. Boom, low right here. We have a low, high, higher low right here. This right here may look like a high, not a high because we didn't follow. Obviously, we're gonna make a higher high, but technically this is not a higher high yet. But it is, but whatever. Then come up here, boom, higher high right here, lower high. I mean, sorry, higher low. And then it just keeps going like that. Very easy. That's trend. Same shit. Same with the downtrend right here. Have our high right here, the low right here, lower high, lower low, lower high. Keeps going down. Okay? That's basically all the trend is. If you struggle with finding trend at first because you can't really like, I don't know, the candles just don't make sense to you. If you want to visualize in an easier way, I did this when I was a beginner, and then I, finally understood like trading good, and then I didn't really need it afterwards. Kind of helped me in the beginning. Just literally go here, click this little thing right here, which is a line. Look how easy it is. You could tell so easily that this is a downtrend. You literally see the high, low, lower high, lower low. I mean, like you could use that, help you figure out the overall trend. If you're confused looking on a higher time frame, this could definitely help you simple it, like make it very simple. Eventually you'll be able to just tell with candles, they'll literally just jump out to you with the screen, but that stuff comes with experience, all right? So that's a trend. Now, what goes hand in hand with a trend is breakage structure, because obviously you can't be in an uptrend or we can't be in a downtrend forever. If you're in an uptrend forever, a lot of investors would be very happy all the time. It's not how that works. So all a breakage structure is we're in an uptrend. So we have our boom, our low, we have our high, higher low, higher high. Now, what a breakage structure is when we go to form that low, normally if you're in an uptrend, it'll be a higher low, except this time we close below the previous low, making a lower low. That is a breakage structure. Okay? Same thing. We're in downtrend, low, lower high, lower low. We go to make this lower high right here, but instead market pushes and closes above that high, making it a higher high. That is a breakage structure. Show you this on the charts. The No, this isn't easy. Nope, not really. Oh wait, right here. This previous example I used, right? Low, high, higher, low, higher, low. Right here, we're still here. Higher, low, higher, high. Right? Once we get to this higher high, now we're gonna be looking at the lows. Okay? So last low that was made right here. Okay? Going into a higher high, higher low. Okay? Now when we look here again, higher high, we're gonna expect a higher low, but market comes, goes below that low and closes below. That's the important part of break structure. It has to close below the low to break structure. Okay. Once we close below that low, we go into a downtrend. Now it didn't really last for too long. I mean, like choppy, I guess, whatever. That's not the point. Now this would be considered a downtrend because broke below that low and we closed below it. I want to show you an example of what's not a breakage structure. Here, for the bearish example, it's just literally the same thing. Come here, high, low, sorry, low, high, lower low, higher low, come down here. You're gonna keep watching the highs. When you're in a downtrend, you're gonna be watching the highs for one to get broken above. Higher low, sorry, lower high, and then lower low. Following, this is the last prominent high. Boom, we formed the new high here. This is the last prominent high. So you're gonna be looking at the most recent highs to see which one gets broken above. Here, this is the high we're looking at. See, it gets closed above right here. We're in an uptrend. You can see, boom, we rally into an uptrend. All right, that's all a breaker structure is. It's literally just a trend shifting. You have to make sure the candle closes below. So we're in a downtrend. I want to try to find an example of what's not a breaker structure because you could easily get confused. I mean, okay, top hill. It's like really annoying. I can't find it. Oh, this is really annoying. Try the 15 minute. Ah, okay. I mean, I guess I could use this. So we're in an uptrend right now. Kind of weird to see, but look, like high, low, higher high, higher low, higher high, right? So we're watching the low. When we're in an uptrend, we're watching the low to get broken through. Okay, come here, come down. This low gets. Oh wait, this isn't a good example. All right, just imagine that this was a bearish candle. I can show you the example. So this is the last low, right? We come all the way down. Remember, this candle is looking bearish, and it really looks like we're gonna shift structure. It does, but you have to wait for the candle closes. If you enter too early, you're going to be FOMOing into trades, and it's not going to be good. You're not going to be profitable. You're going to come down. You're going to wait for a closure. If we come all the way down, come back up, and we don't close, that's not a break of structure. Right? To keep it very simple. And the last thing, change in state of delivery, very similar to a break of structure, except you don't have to close below the wicks. You have to close below the bodies. All right. So when we're looking at change in state of delivery, we're kind of similar. Like we're looking at the trend. So here we're in a downtrend. Another way to look at downtrend is see these up close candles. Every single time there's up close candles, they're getting engulfed by down close candles. Down close candles, little up close engulfed. Up close candles gets engulfed. Up close candles gets engulfed. Okay. So when we have a change in state of delivery, right? Keep having these bullish candles getting engulfed by bearish candles. And then here you see a flip. Looking at, no, there's no change in state. It's choppy. I want choppiness. Be a good example. All right, right here. It's fine. So we were in a downtrend. Now this is chop, but just imagine we're still in a downtrend here because these bullish candles are getting engulfed. I guess it's just consolidation, but just imagine we're in a downtrend, right? So we're looking for bearish candles to get engulfed. We're looking for bearish candles to get engulfed by bullish candles, okay? Because currently these bullish candles are getting engulfed by bearish candles. And here we see these two bearish candles come up, and this gets engulfed. This engulfs these bearish candles. All right. I know that's not a good example. Let's put this example. Perfect. I don't know why I didn't just use this one in the first place. All right. So these bearish candles are getting engulfed by bullish candles, right? That's the delivery right now. We're in bullish order flow. We're in an uptrend. However you want to call it. We're going up right now. Okay. So what a change in state of delivery is we come up and we want these bearish candles to start engulfing the moves up. So although these two candles engulf this candle, it's not a change in state of delivery because we need to engulf down here. We need these candles to get closed down on. That's a change in state because this is the move up. We didn't get it here. We get a little move up here and then it gets engulfed. That's a change in state. There's different ways that people look at change in states. I just see which candles are getting engulfed. That's my change in state. A lot of people they won't consider this a change in state until this candle gets closed because this is the move up that this is the highest move up. You see how in like this recent range, this is the highest point. So this move up, that's the highest point, needs to get engulfed. For me, just to keep it simpler, because I don't really use change in state too much, but it is an important concept to know for trend. For me, I just use like for example these last three previous candles. This bearish candle clearly engulfed these two candles. For me, that's a change in state in delivery, probably going down. A little bit different to break a structure because technically breaking structure we would have to close below these lows right here. So I guess it's like a quicker way you're using change in state for as an entry. It's like a quicker way to get into the entry. I use it more just for trend, just to see, you know, which candles are we engulfing? Are we gonna switch trends? Just like that. I'll draw it out because I don't know if I have a lot of sense there. Yeah. So I'm gonna write the definition. I'm gonna write the rules for break a structure. That way you can write them down and we can have them on paper. So when you're in uptrend, uh, watch the most recent low and wait to see if it closes below. downtrend's the opposite. When in downtrend, watch most recent high and wait to see if we close. Okay. This is for break of structure, right? And here, let's move this here because but it's also good to know if you're trading NQ. If you want to know if your one ES tick is $50, one micro ES tick 5. I think one YM tick, which is just the US 30, is I want to say it's $5, and one micro is cents. Don't quote me on that. I would I would look it up first because I haven't traded YM in a while, but I do believe that's how I do believe that's what it was. These are the main things. That's probably what you're only gonna be trading in futures. NQ, ES, YM. I personally only trade NQ. I do use ES to like help me with my bias, but like strictly speaking, like only putting trades in, I only use MQ. All right. This is definition of break of structure. All right. And I mean, I can't really write out change of state delivery. I mean, really just, I guess I could make a drawing where I'll do what boxes. So we have like a little move up and it gets engulfed. And then just imagine we were in an uptrend here. So like every single time we had bearish candle, which would be right there, there. Every single time there is a bearish candle, there's a bullish that would engulf it. Wow, I am yeah, hold on, I'm so sorry. Whatever. Let's just say that let's just say that this candle engulfed it. Alright, we're in an uptrend here. And then all of a sudden there's a big candle that closes below the body of the move. So this here. Same thing with a downtrend. Downtrend is just opposite. And yeah, I mean that's basically it. Um this is just the first part in a little mini boot camp that we're gonna do. This is very basic stuff. Next video we'll probably go over liquidity sweeps, fair value gaps, inverse fair value gaps, just like very basic ICT concepts. And yeah, hopefully I'll see you for the next video.